All right, so start of the new week. I usually do these a little bit earlier in the day, but little sidetrack today. But we got a nice bounce, and I was actually looking at the chart throughout the day, and we got a 9 on the daily, which would have indicated like a good signal to potentially buy, and so if you know some of the rules for the T sequential, right here, what we're seeing on the daily is we're seeing a 9 count. So this is the setup trend to the upside. We got price came back. We did get a green number above a prior green number above the 9. Uh, we went higher. That kind of faded. We were a little bit extended. I can bring up the RSI and see how extended we were. Not so much. Well, we really weren't that extended, but we did have this bullish divergence on the RSI. So, and then we got a price breakdown, right? So we hit a new all-time high. We got a exhaustion on the 4 hour. I think the 9 pretty much hit the top almost exactly. It didn't. It wasn't the exact top. It was off by $49. Uh, so we have that mark as far as back up to the upside as an area of potential resistance. And then we ended up getting a full count down to the 9. But here's what's kind of special for this. So for TD sequential, if you get a 9 count, we had basically consolidation, a breakout, and then now we're going back down. What was really important about the way the price pulled back was that we got support right here where this setup trend is. And as long as if there's a good price bounce, this is what this is called. This is a perfected 9. Uh, the 9 was just as low as the 7 or the 8, so it's a perfected 9. It's also uh, a perfection. What is it? I can't remember exactly what the term is, but what it is it's telling you that the buy is also like a perfected buy setup, because this 9 never or none of these candles, the 6, 7, 8, or 9, never closed below the low of this 1, which was the setup trend to the upside. So this would have been a strong indication of an area where you could enter. I really wish we would have um, kind of maybe consolidated. I mean, that would have indicated weakness. Kind of, we wouldn't have got such a big bounce, especially if you trade TD sequential. The fact that we got a large bounce, or I say a large bounce, the fact, I mean, it's over 5%, much higher from the low. But in fact, that we've seen some good price action back up kind of validates this type of, you know, entry to the upside. As far as getting a bounce, high probability that we would get one, and we did. So is it possible that this area might not be an area that we go back and retest? It is, because the way the setup was, but I'm not going to rule it out. Not until, I mean, even if we hit a new all-time high, if we go to 100,000, this area would still be of concern. I mean, that's a 50% pullback, about a little bit more if we go up to 100. So this overall pullback so far has been greater. I did say the last time I did a video, I think 15 to 25%. It's a little bit greater than that. Almost as bad as the one in January, but not quite as bad. So we got the 9. It almost went below, oversold on the RSI. The weekly, I mean, you can see the breakdown was clearly there. We had broke the SAR last week. I can look over the funding rate. I wish the funding rate, I mean, it kind of stayed relative to what it was last week. Didn't change. It really didn't change much. Um, so I really wish we would have went to, net short the market. Um, but I mean, we've kind of stayed in the area. It's been going sideways. So this is okay. I think on the 4 hour we did go net short. We did a little bit. But yeah, so we're finding support. Is this sustainable? We can look at our trend lines, our moving averages. Yeah, that closed down. We were below the 2 week low. That's really not good. Based on this moving average strategy, you would be out 15% of your position, waiting to break above the 2 week high, and that would be a new all time high. So we would have to see a new all time high this week, and then with real confidence to re-enter, uh, you would have to get a daily close above, this high, the all-time high. for us to potentially get momentum to the upside. It would have got you out on the daily whenever the price was below the 8 and you had a 30, the 8 intermediate below the 30 as well. So that would have been pretty much right here. You would have got out at 51,701, which is lower than this, but then you could have played that and then maybe re-entered uh, at 7 o'clock a couple hours ago. Based on this, and if you actually combined the trade with the TD sequential. So yeah, I mean it's pretty much neutral. We did get a nice bounce. We'll see if this lasts longer than 1 to 4 days because that's the potential bounce, and we might get more downside. We can look at the CMF to see where that is. That started giving us some bullish divergence. On the 4 hour, probably did it a lot. Yeah, see, so there's some other indications that said, hey, go start, enter a long position for the time being. So yeah, you'd go 1 to 4 candles. We'll see. What's the CMF? CMF's going down on the weekly. I did see a note that the hash ribbon actually had set a signal for a capitulation actually back here. When was it? When was this? Let me zoom in. Right here. So that was the 19th. No, this is based on the daily. So that was the week of the 19th. This is the 24th. Not quite the low. But this isn't, hash ribbons don't give you a exit. You have to base your exit on other indications. Hash ribbons are just there to give you a entry, and usually whenever you get an entry buy on the hash ribbons, price goes up. You're pretty much on the relatively on the low end. It's like this is the area where you go all in, especially if you are coming out of an extended bear cycle or just a bear cycle in general, because it would have got you in right here at 9,300. You could have went all in with little fear. Again, in April 20th at 7,500, it said to buy. I don't even think you would have been down. That signal was great, and then the one at 9,300 was also great. Yeah, so you would have been up, consolidation, and then it told you to buy again, up, consolidation, and it went higher. This one here, back in 2019, I mean, that was a good buy. We did go up, but then we had COVID, which is just, swan event, and went down. So, yeah, I mean, that's Bitcoin. Not much to say. Neutral to maybe bullish bullish definitely for the next 2 to 3 days, potentially 4 days, but neutral overall on the trend until we get, I would say until we get, where would we have to get? Where could I be bullish? If we break here, if we break this again, as far as, yeah, that's not a big move. We'd have to be over 60,000. 61. We maybe basically a daily close above 62,000. Man, this one's even higher. So a daily close above, say 62.5 would probably be enough to get us, to a new all-time high and kind of give us the momentum to go higher than the all-time high and fade out. That would probably be a good entry. And if I'm being honest, yeah, you would miss this upside. Even if you entered right here, you would miss 20%. But no one knows that the that the bull market is over until it's over. So you'd be, you're being cautious here because yeah, we can rally up all the way to like 60,000 and fail. And this high could stand for the next until the next cycle for the next. So that's 2014, the next halving. So it could stand for the next 4 years, 4.5 years before we get a new all-time high. There's a lot of other indications that say we're probably mid-cycle, but in reality, if you're looking at this just on the face value of price action, you have to be cautious. If you didn't have all that other data, yeah, we have all that other data, but you'd have to be cautious in your position, and you really wouldn't enter. Like I said, you would have taken 50% out. You would be looking for a daily close above the 2-week high, or potentially above 62.5 on the daily close, in order to maybe reallocate that 15% and get back in and be confident that we're getting a new all-time high relatively soon. and then potentially continuing up in this cycle. So let's pull up Mayer multiple bands because I haven't looked at those probably in a couple of days. Um, Looks like we're turning back up. Probably be some resistance potentially here at 60, which our price action chart shows that. Once we break here, whatever this high is on the upper band, most likely we would get that in the next 60 days. Uh, we broke here back in February, so I said potentially 80,000 in April. This doesn't look like it's going to happen unless we get some massive price movement within the next 5 or 6 days. Most likely that's not. This is going to be the first time that actually didn't happen since the existence of this Mayer multiple in the bear cycle. I mean, in the bull cycle. So, this cycle is definitely different. The players are different. We're going to learn a lot as far as what we can expect in the next halving cycle. We can look at the stock to flow. Let's look at the original stock to flow. So that one, we're pretty much back in the model range. So 48.5, we went there. People were saying, sky is falling, but we were pretty much at the model price, and then now it looks like we bounced right off of it. Stock to flow the cross asset model, that one, yeah, we were a little bit lower. We were right at the model, but now are below it. I mean, this one might not play out. I actually have a little bit more faith in the original one than the cross asset one, but we'll see. Golden ratio multiplier that gave us that we should be at a high. We're pretty much back at the second golden ratio. You can look this information up. So maybe we go back to this upper one, the 3, which is at 73,000. This model's really giving me things to think about as far as, because it pretty much said that we should have been at a top, but this could have, for this cycle. But I think this model is going to break down and reset, and somehow it'll definitely have to be reevaluated because I don't think this model is going to hold. It looks great right now. As of right now, it's on the money, but I don't think it's going to hold. I just don't. Just based on also a couple other things and indicators that have been around for just as long, if and some not longer, than this golden ratio multiplier. We can look at cycle repeat because that's always fun to look at, even though we've had this pullback. That's saying we're going to have an even larger pullback to the 200-week moving average at around 40. We're definitely not out of the question. That could definitely possible. This is saying somewhere in May, but still have a cycle top of almost 400,000 in October. Again, this is just fun to look at. So yeah, I think that's about it. We can look at gold because I think that's okay, and I was talking about it as far as like a safe entry in something. The weekly moving averages are moving up. This is kind of a reversal candle, but this could be maybe a boring week. This is where the breakdown level was, so it's very likely that we would get resistance here, and we have. So, if we can get a weekly close above, say 1790, that would be nice. Preferably, probably above this week, last week's high. So 1800 would be even better. And then we would probably expect to see some resistance around where this 30 MA on the weekly is, but we would enter some more or increase our position size once the 3 crossed above the short term, which is the 3-week, crossed above the long term, which is the 30-week. We'd allocate some more and then, ride this potentially out to new all-time highs and testing the previous all-time highs. I don't have anything else to review. Just Bitcoin is all I really want to talk about, in gold. Maybe I'll pick up some other things tomorrow just to see the way the stock market opens. I think the S&P looked great. I think the futures are down right now. This was a reversal candle on Friday. Weekly got retested. I don't think the daily did because it was at around 4,100. Yeah, we had that down day, and then prices markets started to go back up. But, yep, I appreciate it, and thanks for watching.